what drives the oracle is what the users are actually doing.
Exactly.
And so does that then
Exactly.
turn into the competitive advantage in the long term?
Yep.
Is that you guys simply just have the best off-market oracle?
Yep. And we're the first ones to have it, right? Like in theory, the Oracle
Mm.
data is public, right? So somebody could take it from Hyperliquid because we push it there.
Yeah.
But they'll have at least a few seconds of delay, which is horrible.
GM everyone,
So yes.
welcome back to the Open Interest podcast. Today we have SEDA, the oracle that is powering Dreamcash, currently my favorite Hyperliquid market. I think a lot of people on the crypto side of Hyperliquid blew up last year when everything came crashing back down, but then Hyperliquid got super interesting again when they bought things like oil. But I think most interesting for me is equities. So thanks, Jasper, for jumping onto the podcast. Let's kick off with a quick intro about yourself and also SEDA, how you guys got to where you are today, because I think you guys have an interesting history, a bit of an unconventional one. I'd love to dive in to how you guys ended up where you are today, powering
For sure.
Hyperliquid.
Yeah. So on me, I'm the co-founder and CTO of SEDA. I've been full-time in the space since 2018. Started off as an independent researcher. Was working on L2 scaling in 2018, which was Plasma at the time. So we got a grant from the Ethereum Foundation and worked on one of the Plasma clients implementations, which was extremely theoretical at the point and never really saw the light of day. After that, I ended up meeting my co-founder at a conference, and we started building in the space. And the story is basically that we were fooling around with building a bunch of products here and there. Decentralized applications had like 80 monthly users. There was nothing to use that was sort of like on chain. We were there for the crypto kitty moment, but other than that, it was sort of like a flash in the pan at the time, right? And one of the things we did see though was like Augur came out around the time, and then there was like a bunch of interesting prediction markets coming out. So this idea of like derivatives around events was really interesting to us. And we were sitting in a WeWork, building a bunch of stuff, thinking, what the hell is going on here? I mean, we were in a WeWork. It was basically empty. We were getting a bunch of free stuff. There was 3 more WeWorks opening in the same city as we were living, but this one was not
The
full.
top signal.
Yeah, and we're like, how do we short this, right? And so we came to the conclusion that there's really not a way to short that. And so the idea was that, hey, let's take this because everybody was doing prediction markets for everything. Let's narrow it down. We just do like events and derivatives and baskets around startups.
Yeah.
And we allow people to get long or short exposure on private equity, right? That was the initial thing that brought us into DeFi. While we were building this, we're like, how the hell do we settle these markets, right? Like, where do we source data from? We were talking to Chainlink, we were talking to Augur. Augur's resolution time could take at least days, worst case scenario, weeks or months, and could end in a hard fork of the network. So like both of these things are not ideal because Chainlink's very expensive to do something custom. And then, we built some stuff with like, pricing, but for what we wanted to do, you really needed to like bespoke Oracle methodologies. And so we started building oracles. So we pivoted from like the, platform to oracles, and built a first party Oracle at the time that did like 150 plus billion in total sort of like volume that we secured with that oracle. But again, we fell sort of like in this pigeonhole where we were, had this first party oracle that served X amount of data, but you couldn't customize it. The data was, I call it kind of like simple or dumb data. The usefulness is very limited if you do not have ability to do compute on it. And so the next step was that we were like, okay, how do we sort of like aggregate all data and create sort of like a system that enables people to bring any data in any shape on chain. And that is what SEDA had become now. So think of it as like a transformation layer between data source and blockchain that allows you to take data from any source, aggregate it, or perform any sort of algorithmic logic on it, and then bring it on chain. It's a long-winded introduction, but that's how we got here.
That's amazing to hear. So what I'm getting is that like the main differentiation between SEDA and Chainlink is it sounds like SEDA is able to create things that Chainlink can't, and I think that's super relevant to what we're just about to talk about, which is what you guys are building with Dreamcash, where the markets run 24/7, but the original data sources don't run 24/7. And that's essentially the problem that you guys fixed. I'd love to dive in deeper to how you guys approach this problem, because this all brought me back to Hyperliquid. Like after getting fully liquidated last year, I was like, okay, I need to be more conservative. I was like longing pump fun, and it just went the complete wrong way. And then I came back once I saw S&P, because Hyperliquid had this period where it had individual equities. And still, I was like, I don't know if I want to go long 3x Tesla. I kind of want to have something that I can hold for the long term. And that's why when Dreamcash released the S&P 500 market, that was super interesting to me, because if you look at the solution for leverage equities in like TradFi, like leveraged ETFs, they actually suck. It's arguable whether they suck, but like because they have to rebalance every single day, you get a lot of volatility drag when the market goes up and down. But you don't have that in Hyperliquid in these Perps markets, which is why I was like, okay, here's a product that I think is actually going to get a lot of traction, because if you want to go long X, like let's say 3x long the S&P 500, you finally have a place to do it. You can do it on chain. You can enter the market whenever you want, if you want to enter it on the weekend. And I think that's been even more relevant in the past few weeks with everything going on in Iran. I think we're really seeing why having a 24/7 market is so important, to where now even the public markets are starting to reference what's happening on Hyperliquid. But going back to my question, how did you guys make this happen? I'm curious as to how the pricing actually works. I think it's amazing. And also, it's just, I'm still trying to get my head around it, because from what I read, you guys are essentially creating the data on the fly, which is extremely interesting. But yeah, I'd love to hear more about how you guys are actually doing that.
So for this specific market, right, you have, so we work with Pith for this, which is an Oracle provider. And they have these, it started with EMH6. So they have like futures pricing. So it's like the CME futures for the S&P 500, the most liquid vehicle for S&P 500 trading. And by itself, this is not usable for a 24/7 perp, because it has a maintenance break every day for 1 hour. And then it doesn't trade weekends, right? So from 8 p.m. on Friday, Eastern time, to 8 p.m. on Sunday, you can't trade it. And so since perps are by definition 24/7 and you cannot pause a blockchain, you need to work your way around this. Otherwise, also for perps, you get these gigantic, especially during these tumultuous times, you get gigantic gaps between Friday close and Sunday overnight open. And so what we do is we take the vanilla, if you will, Pith feed, and we add a bunch of logic on top of it. So the most basic version of this, which is the case for the S&P 500 vehicle, is that we basically check within the SEDA system, like, hey, what session are we in? Is the market open or is it closed? If it's open, because it's such a liquid vehicle, we take the naked price, but then we do a futures to spot conversion on it, which is basically like you take an interest rate and you apply like, an opportunity cost discount, basically, right? For holding like the spot asset versus the future asset. So you discount that off of the future price. So the closer you get to the expiry of the future, the lower the discount gets in relative numbers. And we pass that through. So just, we take the Pith data, discount function, pass it through during open. Then when the market's closed, or if Pith is still, or it's a holiday, or it's the maintenance window, what we do is we say, okay, the market's closed, there's no price, but people need a price to trade in. And so we are changing the methodology for Dreamcash now, actually. But what we were doing for the first weeks is that we took the last reported Pith price and started weighing in the impact price within the Hyperliquid order book in the form of a financial moving average. And so what this means is that you take the last reported price, and for an hour during the maintenance window, or for 48 hours during the weekend, you start slowly ticking up or down the last known Pith price based on activity within the Dreamcash order book itself. So, if it's trading higher, then slowly you'll see it trade up higher, and slowly see it trade lower. And so the main thing this does is it makes it more volatile on weekends. So you see some sort of volatility, and you'll see it. We have dashboards where you see it. Like, we close the gap really efficiently over the weekend. If there is a gap between Friday and Monday, like, we close it by usually like 95% 5%. So the gap is like greatly reduced on Monday open. And so that's sort of like the most basic, most safest, almost impossible to manipulate weekend methodology, which works really well if you have an active order book and good market makers, right? Because they will arbit back to reality, basically, if there's an attempt of manipulation. And so it's like, in this case, it's a 4-hour EMA that slowly adjusts the price towards where things are actually trading.
Yeah, that makes a ton of sense. And you guys put out a post on X where you talked about there's sort of 4 different aspects to this. One of those is session awareness, which you just went over, where the oracle changes based on whether the actual underlying market that it's referencing is open or closed. The second one, you just talked about the self-referencing EMA. But there's 2 more. So one is the staleness fallback, which I'd like to dive into, which is what do you guys do if PIT goes down in this case? And then I'd want to dive a bit deeper into the cost of carry discount, because I don't think that's maybe apparent to the audience, is that you guys are essentially taking a futures market and then moving it into a spot market. Why'd you guys choose to go about it that way? Why not just reference a spot market?
The futures market is the most liquid vehicle, so it's the hardest to manipulate. That's the real answer there. Like the S&P 500 most popular instrument to trade
Yep.
is just this future instrument, and so we want to take the most liquid sort of like indicator and base
Yep.
our markets prices off of that, right? And if that forces us to do some sort of small discount on it or like some sort of small calculation, that's okay. Then what was the other question? The other question was
About the
diving
staleness. So
deeper.
essentially, what happens if PIT goes down in this
Yeah.
case? Because Hyperliquid can't function, right? If the oracle goes down. So how do you guys prevent that?
So if the oracle goes down, we just fall back to the internal oracle, as we call it, which is sort of like the closed market pricing, right? So it's very simple. Like it detects staleness, and if it's stale, then it falls back to the internal oracle. There is this other interesting thing with the session awareness, is that for
Yeah.
less liquid assets, it's not just whether it's open or closed, but you have sort of like these 4 sessions, right? So you have regular hours, in which you can assume
Yeah.
decent liquidity. You have overnight, which is like the least liquid. Then you have pre and post market,
Yeah.
which are medium liquid, if you will. For
Yeah.
some of the assets that see less volume, especially on the overnight, we also are aware which session we are in from the trading sessions. And so
Gotcha.
you can add logic as well for sort of like any session that's not regular trading hours. So it goes a little bit beyond just open close.
Very interesting. And you mentioned in passing before that you guys are looking at changing the methodology a bit for Dreamcash. If you
Yeah.
can speak to that, I'd love to understand what you guys are changing and what you guys have noticed from operating it for a while now.
So it's very conservative now. Let's say that. So the market and Oracle price are equal on during closed hours. So we basically set both of them to like a extremely conservative EMA. I think as market makers get more comfortable quoting, they're open to like less conservative methodologies slightly. So the idea is just to wind up volatility on weekends a little bit, like allow for some volatility. Yeah, I'll leave it at that. I can't share much more. You'll see it in the wild very soon.
That makes a ton of sense. I'd also like to understand, how does Oracle quality in this case impact liquidity? Because for me, like, and maybe I'm just not that tapped in, but like Dreamcash kind of came out of nowhere and then became super successful. Like, I think everyone expected Trade XYZ to obviously be massive. They're one of the OG players. Everyone was sort of backing them. But then there's a lot of other markets that I think launched, like Hyena, Felix. But then the Dreamcash is actually the one that is seeming to have gotten the most adoption after Trade
Yeah.
XYZ. How does the Oracle that you guys have built contribute to that? I think you guys made some posts about how it enables the market makers to quote better. And yeah, I'd love to understand what you guys did differently from these other
Yeah.
markets.
The closer you're able to get the Oracle to reality, the more comfortable market makers are quoting some sort of liquidity and depth around Oracle price, which is important on a perp dex, right? You want to stay around Oracle price, or otherwise you're going to get rinsed by funding. So I think that is the main thing. Like market makers need to be comfortable quoting size and making sure that they do not like bleed out over positions for a long time if Oracle does not quote correctly. So I think that is extremely important, right? Like depth on markets is extremely correlated to Oracle availability and Oracle accuracy. And so, the Dreamcash team has been extremely involved as well with these Oracle methodologies. They're very good, and they have their market making is like next to none. I think that's really good. Like, they have extremely good depth, and I think that's why you see like good quoting, good volumes on their books, is because
Yep.
also if the market makers can quote good depth, then you see a lot of arbing with trade, probably, right? Because there's some overlap in the
Yep.
markets that they list. And so everything sort of starts evening out that way. And I think that's really good. I
Yep.
think it's important that when you have a bunch of perp dexes that all have the same markets listed, right? Because you see a lot of like non-hyperliquid perp dexes also want these 24/7 RWA feeds. I think it's very important
Yep.
that the methodologies align so that market makers can sort of like, jump in and know that the Oracle is good. And also they can arb and know that, they won't get rinsed because one of the
Yep.
Oracles is just completely off by a few percent on an asset.
Do you find that the relationship between liquidity, users trading, and the quality of the oracle is quite reflexive for you guys? Because from how I'm seeing it, if you guys continue to get more and more volume and more liquidity depth from users, that at least in the off market hours improves the quality of the oracle for you guys, because
100%.
what drives the oracle is what the users are actually doing.
Exactly.
And so does that then
Exactly.
turn into the competitive advantage in the long term?
Yep.
Is that you guys simply just have the best off market oracle?
Yep. And we're the first ones to have it, right? Like, in theory, the Oracle data is public, right? So somebody could take it from Hyperliquid because we push it there.
Yeah.
But, they'll have at least a few seconds of delay, which is horrible. So yes,
Yep.
as data originators, this is exactly right.
Does the data, talking about latency, so you guys have this deployed on Hyperliquid right now. Let's just say in theory, there's another perp text that launches in let's just say Lido, right? And Lido wants to use your guys' oracle. Is that price feed something that can be transferred to Lido, or do you guys see it as a per exchange oracle that moves by the order book on that exchange?
Depends on what they want. That's really the thing. That's the cool thing about what we've built. It's like super bespoke, right? So if they want to use the exact same methodology as trade choosing, right, we can give them that. Or if they want to have
Yeah.
the same as, Felix, they can even use the data from the HIP3 markets into their own weekend pricing if they have a less
Yeah.
liquid book. But for somebody like Lighter, I would expect that they would want to probably use their own book and have like a similar methodology. And then the logic is very similar, but you need to plug in different sources, right? So for Hyperliquid, we work with Hydromancer, for example. They're fantastic as a data provider. And then for Lighter, we probably use their own APIs, right?
What's the benefit in this case of Lido using their own book over using something that aggregates across all of the books? Is there a benefit to doing something that is on your own exchange?
Yeah, I think the benefit is that it reflects reality for your own books, right? So for market makers that are market making on your book, it reflects sort of like where your book's trading. And then realistically, because it's all using a similar methodology, it should all go back to the same price anyway. And then we're also working on some more complex sort of like weekend pricing algos, which will most likely take, a bunch of on-chain venues and do some maths on that and then create a single sort of like output price. But I think for the more liquid dexes, it kind of makes sense to use your own book.
Makes sense. You mentioned right at the start of this episode that you guys were doing essentially pre-IPO stuff, and that's also become a bit of a trend on chain.
Yeah.
I think largely because the biggest companies are, well, maybe not the biggest, but the most interesting companies right now are pretty much all pre-IPO with like OpenAI, Anthropic, SpaceX, and a bunch of other stuff. And we're sort of also seeing that trend in crypto right now, like across are trying to roll back their token. And I think a couple of other projects that aren't getting what they need out of their token right now will probably do the same. Eventuals as their market. What's your perspective, having been an OG builder in this space? Like, what, let's say, didn't work back then? What's working right now? And do you see this as being like a solid venue in the future, or is it just a place for users to gamble on?
No, I think it's, I mean, listen, I really hope Ventuals makes it work because it's really cool. And it's sort of like, the dream we had building Flux initially. I think one of the biggest issues back then was that there's a bunch of data providers that do relatively okay PE pricing now. So you have like some Oracle data. It doesn't update that much. Like we built some
Yep.
with Injective. Injective runs a bunch of pre-IPO markets that we power.
Yes. Yeah.
So you have sort of like, a few touch points a day that tells you, hey, where has this been trading over the last N hours? So that changed. Then also, I just think, building an entire perp DEX just to do pre-IPO markets is so expensive for something so risky that I don't think people would have funded that, because it's been tried a
Yep.
bunch too, right? Like these pre-IPO markets. And HIP3 just completely opened that door, right? Like instead of having to build your own entire perp DEX, I mean, you have to raise a ton of money in order to or stake it, right? In order to open your HIP3 DEX. But that is, which is also, by the way, temporary. I think like there's a bunch of people building launch pads for HIP3 as well.
Well, Ventures community raised the money as well, right? They launched the VHype LLC, and that's how they got there. So
exactly.
Yeah,
So there's different ways to do it. But yeah, so no, I'm really excited about it. I really hope it works. I saw a tweet from Alvin, I think, that was a really interesting concept where he helps you get secondaries on, for example, Anthropic and SpaceX at a price that is lower than the current Ventuals price is trading. And so you can immediately ARB and hedge your secondaries position on Ventuals and just farm the interest rate and sort of like farm the delta, which I thought was really, really interesting. I thought it was really smart. And so these types of, that's like a way to force your book to like real price. I thought it was really creative and cool to see. And so, yes, no, I fully believe that these things are necessary, especially I don't know, the incentive to go public is kind of low. There's so much money in private equity now. Yeah, especially for a long time, I was also of the opinion of like tokenized like startup equity and stuff. I thought that was cool. That's also sort of like my dream back in the day. But I'm starting to think, I've definitely now realized that illiquidity of startup equity is very much a feature and not a bug. I think it's very good that people don't get to trade it day by day based on, emotions and whatever. And people are sort of like bag holding by definition until it's either a success or not.
Well, I mean, that's exactly what we see in crypto, right? Is like if your token price goes down, like no one gives a shit about what the fundamentals of the project look like. It's just, the token's gone down by 50%. So the business they're running must have gone down by 50%, but sometimes it could be exactly the same. And I think tokens are also, or the opposite. I mean, we've seen a lot of that this year, like with like, a river out of nowhere running up to tens of billions of market. I still don't know what it does. All I know is that the CoinGecko chart is like up and to the right for some reason.
I've never even heard of it.
Yeah, it's crazy. You guys have a lot of experience in building this pre-IPO stuff, but I think maybe the audience doesn't exactly know how these things are priced.
Yeah.
What does pricing these things actually look like? Like the work that you guys are doing with Injective, maybe if you know much about how Ventuals is doing it, what is pricing these things that don't trade actually look like? And what do you see the future of pricing these things look like? Do you see the same model that you guys are using with Dreamcash eventually bridging some of that gap? Because it sounded like the price updates are not very often. And so how do you bridge that in the middle?
The pricing is very hard. Let me say that first. So because there's a few data providers that do this, who basically aggregate or buy data from brokerages who handle in secondaries. And so these brokerages just basically give them books, access into like their closed trades for the past day. And then they aggregate that. So like a bunch of OTC desks and brokerages, etc. Some market makers, some SPVs that disclose, like large SPVs that disclose like sales, etc. It takes a while to gather all the data, get to a new price, publish it. That just takes, let's say, 4 to 6 hours, right? The problem is though, it really depends on your algos and the quality of the data. Like that's really hard. And so I don't remember exactly how Ventuals does it now, but I believe what they're doing now is they take one of these data providers, they take the price from them and then do something similar with the sort of like internal book. And so the internal book sort of like goes up and down based on that price. I don't know exactly. And so, it's just a question of, is the appetite of retail and institutions big enough to start? Like, is there going to be enough liquidity from retail traders and sort of like, I don't know, institutions would just buy the secondaries, right? Like I think the perps would really only be purchased to hedge your secondaries by institutions, which means that there needs to be retail interest to long at that price. And so then the question is, how much retail appetite is there for that? And I am kind of bullish on that, actually. I think over a longer time horizon, that will be quite high, especially if we see sort of like the public market sort of like slow down. I think that's likely because public markets, there's this whole theory right now about, with AI, the future is so uncertain. So why would you want to buy a stock to hold for 5 years? Like you'd have no clue what it will look like in 5 years, right? Like it's becoming way more momentum based. And for that,
Yep.
like smaller private startups just make more sense to me. And so I think if that's the world we're going to, having some sort of pricing mechanisms on these things so that you can go long on metrics or valuations, I think that's really cool. And I do think, like I talked to you before the podcast, there's sort of like three main theses we
Yep.
have at SEDA. That is perpification. So I think perps are going to take over a lot of share in sort of like the
Yep.
traditional markets as well over the next years as an instrument for trading.
Yep.
Everybody is launching perp markets. And I think they're going to be absolutely huge because they're just way more simple to use for retail as well, like
Yep.
instead of like options trading. The second one is global 24/7 markets. And the third one is sort of like it will be institutions and agents using blockchains. But we don't need to touch on that one, those two. I think, if we believe in perpification, I think that perps will become much more liquid. I think these pre-IPO markets will see a ton more value. I think stock market will see a ton more value. And I think, especially on weekends or illiquid hours or assets, you will see price discovery happen on these perps, right?
Yeah.
So it's
I,
like
I
price
think to some extent
originators.
we already are
Yeah,
as well,
exactly.
and
So, so
to some extent, and
and
it's funny. Yeah,
that includes private companies, in my opinion.
it's like I always find it funny. Like if you go back like 4-5 years in crypto, there's all these pipe dreams about like like when Bitcoin's gonna get onto an ETF. We all would have made it, but by now
Institutions are going to buy our bags.
when
Yeah,
yeah, institutions are gonna
I
buy
heard
our
it since
bags.
2017.
Yeah, and now all of that's happened, but it's still crazy. Like Bloomberg is talking about Hyperliquid now. It's like the fact that it's even on the map is crazy. Because you wouldn't expect it, and it's like it's not like this is the first time we've had perps. We had perps before. We had DRIDX. We've had perps on Solana for
BitMEX.
quite some time. It's just crazy. I think perps are 100% the right way. I know you said you don't have to talk about it, but I'd love to. You mentioned agents and SEDA, and I think this is something I've been trying to understand a lot about SEDA. You guys are much more than an oracle. So how does agents tie into the vision for you guys, and how do you see SEDA
Yeah.
servicing agents in the future?
It goes back on sort of like my take on why blockchains are cool. And it's sort of like this idea of like permissionless, credibly neutral settlement, right? And so I believe that 24/7 global markets will run on blockchains because none of the parties in this 24/7 global economy trust each other. And so you want to have trustless environment to do
Yep.
settlement of trade. Then you have this sort of like parallel thing happening, which is this agentic future, this agentic internet. And the same for agents. Like they don't want to use bank accounts. They want to use like a cheap way that's permissionless to transfer money from A to B or do
Yep.
XYZ. But agents also cannot trust each other whatsoever, right? Like they also need like some sort
Yep.
of credibly neutral settlement layer. But where blockchains settle value, what settles truth? That is where SEDA comes in. It's sort of like verifiable, because the way SEDA works is you create an Oracle methodology. We call it Oracle program, which translates to a hash, similar to a smart contract. But as an agent, you can audit that a certain set of logic computes to a hash. And so two agents
Understand.
can have a single hash correlating to a set of logic that queries a bunch of APIs, it does a bunch of stuff, and agree and verify that that will do a certain thing. So I see SEDA as sort of like a credibly neutral truth settlement layer where agents can come to blockchains, say, hey, we want to make a bet, or we want to do this, or we want to do that. And we want to have payouts happen based on the output of this hash, which is just
Yep.
correlates to Oracle logic. And they will both know that that's actually comes from those sources and has actually been aggregated in a certain way. And so
Yep.
it becomes super trustless. And for humans, this is extremely complex, right? It would be very annoying to have to build those rules, then compile those
Yep.
rules, look at the address, like compare it, then say like shake hands
Yep.
on it or put it in a contract or whatever. That's never going to happen. right? Or it requires like a lot of force, but because it's a super deterministic process, machines will be very good at doing this. And so I see
Yeah.
SEDA as sort of like, the permissions layer of sort of like this agentic settlement future. That's how I see it. It's a
Yeah.
pretty technical story. I need to work on the translation of it, I think, but that's the vision. What it boils down to is like a truth layer for agents that by definition cannot trust each other.
And I think what you said makes a ton of sense. Like smart contracts with this verifiable way for execution, but I don't think execution is the problem that we're solving
Yeah,
anymore. I think everything in some way boils down to a problem about data, and what you guys are providing is a way for essentially agents to, in some ways, write data contracts that they can then both agree on, and they know that it's verifiable, and so then they can agree on this data at a future point, and so actually interop with each other. And I think this is going to be increasingly important, and like this is maybe a shill, but this is sort of why we are building what we're building, which is a trading application on top of Hyperliquid that uses AI to pass data to traders. Because I think what we will see over the next years is that data is going to go exponential. But like I split data into sort of two categories. One of them is what I call derivative data, which is data that's created off other data, which I think we're already seeing a lot today with AI
yeah,
slop.
yeah. The
People
recursion, yeah.
taking something and then pushing it through an LLM, and then stuff comes out the other end, and that goes into into the environment. I think it's going to be increasingly difficult for humans to keep up with the amount of data that is being produced. And the only thing that will be able to keep up with that is LLMs, as they are a way to ingest multimodal information and compress it into a form factor that brings it back to something that's understandable to the end human. So I think what you said made a lot of sense. Very keen.
That was really well put. Yeah, thank you for the translation or like your summary of that. It was spot on.
You guys, we're chatting a bit about tokens before. I think what you guys have done with the SEDA token is very interesting, but I'd like to dive in a bit more to how it works, because you guys keep talking about burning the token. Where does this come from, and what powers burning the SEDA token?
We purposefully do not disclose the methodology of like
Okay.
what's happening here. There's a reason tokens are burned, and that reason is related to certain metrics, and I'll keep it at that. There's a reason we do not disclose it as of now. Yeah, not sure if that will change. It's sort of like discretionary.
Okay, that makes a ton of sense. It's just so bullish seeing the token being burned.
Yeah, there
I
is
love it. Yeah.
there's a lot of plans around this in the
Yeah.
future. It's gonna be more transparent, and there's a ton of work being done behind the scenes on sort of like the next evolution of the whole eco. That's I'll leave it there.
Users will have to wait to get more on that question. Maybe to wrap it up, where do you see SEDA in the next 2 to 3 years? You guys have hit a lot of product market fit with Dreamcash. What's next for you
Yeah.
guys? And is there anything coming up in the roadmap that is a level up from where you are?
Yeah. So we win the perp access. That's step one.
Yep.
Because nobody can do what we do. So perps needs very bespoke data feeds, and vanilla feeds just don't cut it. So
Yep.
that's sort of like that simple. There's going to be some centralized exchanges then that also start using our data for perps, and then from there on out, broaden. Like you win one vertical, and then you take that
Yep.
that reputation and that vertical, and you take it elsewhere. And so there's a bunch of other things we're doing in parallel. I think I'm working as well on some demos of like what SEDA for agents can achieve. Yeah, so that's in the end, it's like the mission or like the vision I have for it over the next 5 years is kind of what I laid out, right? Like if you have blockchains
Yep.
as settlement layer for value, I think having SEDA as sort of like the main language of truth for agents, I think is the way I would want to put it.
It makes a ton of sense, and it's super exciting for me because I feel like what you guys have done with the model of the people trading on the exchange being an input has an end goal beyond just pulling a price from Binance. Because for me, that was always like, what's the end game, right? You pull the price from Binance, you pull the price from Bybit. What if Hyperliquid goes to a scale that is bigger than Binance or
Yeah,
Bybit? The
yeah.
only reason
What
we pull the
happens if
price
it
from them
becomes
is because Hyperliquid smaller them, but the end goal is that Hyperliquid gets bigger. And then what's
yeah.
the next step from? And then I think you guys are, I think one of the only people working towards that with that end goal in mind of at some point you have to become the creation point
Well,
for the data.
by definition, we are for weekends, right? Because there was no
Yeah,
data. And it's the
exactly.
same with private equity, et cetera, et cetera. You're forced
Yeah,
to be a data originator. And that creates a very interesting design space. And I think you're completely right. You need to snap out of the mindset of like, it's again, if you use Binance for your data and then that data creates data, then again, you have sort of like
yeah,
this recursive thing that you're talking about, like it becomes almost self-referential because then Binance maybe starts using your data. It's like,
yeah.
what is truth at that point? So being data originators and sort of like the venue for price discovery is definitely core to our pitch as well, right? It's like we tell people like you can either use external parties for the pricing, or you can,
Yeah.
be the dictator of price to some extent.
Hey man, I love it and super bullish. I appreciate you jumping on the podcast. It's been great to chat. I think we dived into a lot of interesting things and very keen to see what you guys put out in the future.